traders? Gary Wagner here just after 9 o'clock in Honolulu, 2 o'clock in New York on Wednesday, 20th day of November 2013. And this is a special early edition of the Gold Forecast Daily Report. We have a major breakdown, major sell-off going on in the precious metals markets and the Dow as the minutes from the latest FOMC meeting are released. We've just broken through 1250. We're currently trading around there, 1245.40. That's the low, 1276.80. That's the high. Current print puts it off roughly $25 on the day. Of course, over the last 2 days, we have been suggesting you enter short positions. Earlier this morning, we sent out a special email saying that if you haven't listened to the last couple of days, get short now. And that was dollars ago. As I say, we're just coming up off the lows roughly at 1250. Silver also trading under significant pressure this morning. Currently trading off about 34 cents on the day, 1986, that's the low. Currently just hovering above $20 per ounce. If you recall from yesterday's show, we said really it has nowhere to go but $19, 1980, and we base that on the 76% retracement level at 1967. High today, 2060, and as I said, 1986 on the low. I think I ended Friday's show talking about that next week, meaning this week, should prove to be a real interesting one, especially with all the data that was coming out. This release of the FOMC minutes, to me, I really am not perceiving anything new. The fact that there's talk about scaling, that's been on the table. QE3 wasn't supposed to be a program that lasted forever. So the fact that at some point they'll taper, and before they taper, they'll begin to discuss it, shouldn't be this tremendous out-of-the-blue comment. I don't really think that much has changed. What has changed is the belief that this easy money will stop. But here's the key, and this is long-term. When we consider that quantitative easing has added $3.9 trillion to the budget deficit, to our debt, that at some point, the bill will be presented to us and we'll have to pay. That's when I think we'll see these markets run. Up until then, as long as we're playing this extended game of kick the can, that's exactly what we're doing. Now, we're looking at a 60-minute chart. I'm trying to line this up pretty much as best I can. But as this market came down, here is the 20th today's trading 60-minute chart. You can see how it kind of meandered back and forth between this range, call it 1258 to maybe 1268. But this 1 hour candle, and this is the most recent activity right now, we saw the market really break from there and go to this low of 1245. Now, for those of you who have been with me for a while, you know that my technique or style is as a hybrid technician, fundamental analysis but technical analysis. And the reason that I put so much emphasis or weight on the technical indicators is I believe it's a much more pure language, meaning that we are simply distilling market sentiment and defining it in a mathematical term. There is less room for interpretation. And we have a clear and potential break below this most current key level of support. I've got it roughly at 1250. That's just where we're at right now. Many times you'll see the market break under pressure, break below a key support level only to somehow come back up. So we're certainly not certain that this market's going to continue to break down. However, that's been our belief and our call over the recent weeks. Now, I'm going to go ahead and compress this because I want to bring into light where this market in fact could go and what a tenuous area we are in. When we look at the chart, once it's compressed, we have this clear break below our existing support. No doubt about that. Now, once we do that, as a technician, we're going to go back and look historically to see how the market reacted at certain key points. And one of the best ways for me to do that is simply to put in a horizontal line pegged against certain lows and highs. Now, As this market comes down, this of course is above, this is above, but these series of lows here, and of course this is the 1180 low here. And all I want to do right now is, as we move this up, I want to look at different areas to see if I can find a place where it matches. So first, we have this top right in here, and absolutely, we are defined and below that point. Then, if we take it down to this area, there's really no technical evidence. Currently, we're not really sitting at any level that should show us any kind of logical support, except for this particular 1250 here, because when we go back historically, we get support, of course, here and support here at 1181. That tells me that if this market actually does break through 1240, and realize I've been talking about that key number of 1236 to 1239, if it breaks below there, there is a real shot that what we're going to see is the market actually go and take out these most recent intraday lows. Now, this one's just at around 1200, and I believe this one is at around 1180, 1181. That's the record low that we had after the fall from grace at 1800. Now, that's still quite a distance away, but what I think is most important is the fact that this is a key level right here, and whether or not it holds this level will say a lot in terms of a technical basis as to where we will see the precious metals going, specifically gold, over the next couple of days. Now, we're currently looking at a daily chart, standard candlestick format. We talked a little bit about the fact that the MACD on the daily had crossed, but they were coming close together again. More importantly, on this particular chart, what we have been looking at is really the subcount. Long wave 3, I don't have a subcount there. Wave 4, we've divided into our A, B, and C. Takes us into our final concluding wave 5. We have our benchmark wave, wave 1. Wave 2 came to a perfect fib level. And then wave 3, that if it's simply equal to wave 1, is going to take us roughly at these lows, which is 1180, roughly in that area. The key right now, it's at 48. I have a sense it will break down some more, but what we want to see is if the market continues to break down and move lower, what's going to happen at 1237? Because if it breaks through that level, it's already broken through the key levels at 1250 and 1260, but if it breaks through this 76% retracement level, as I said, I really believe that there is a pretty reasonable probability that we're going to see gold go back and retest these lows at around 1181. Now, I've put up our long count in gold, and we're looking at a weekly chart. I've converted the 3-day back into a weekly just to kind of compress some of the time so we can take a look at the big picture, because what we're seeing here, absolutely, as it unfolds, is we had really a parabolic rise up. We had a dramatic rise up, but we have a dramatic parabolic fall. You know, a candle that burns twice as bright shines half as long. And you're getting this decline in just a very, very short period of time, even compared to this accelerated move up. When we look at it this way, you're going to see that there's another reason that 1181, that area, is so critically important, and that is our long-standing fib retracement of a major move. And when I say a major move, I think I've got this one pegged either from 1,000 or 700. Yeah, 700. This is the beginning. Now you see why I put it into a weekly so we could look at this, because this is an important number. If you consider that the beginning of this bull run happened right at the end of 2008, and in essence, because we had hit close to 900, mark comes down to 700, and then really runs, we have this tremendous run, what, $1,200 run, 1,700 to 1,900, and that kind of a run, when you look at that run, I really am surprised to see how quickly this market comes down, but here's the key. When we look at this and we do a 61% retracement of this move, that 61% retracement takes us to 1161, just $20 below that 81 price. Now, let's take a look at this historically and realize that in this price point area, there's not a ton of historical data to look at because the market is only traded at 1,200 or 1,400 or 1,500 on the way up once, on the way down once. So we don't have a tremendous amount of data, but just looking at it, the market comes in and you can see this spike, this peak. This happens, I believe this is about 1,250. Market comes back down to about 1,000. As it comes up, really there's no clear indication that this is support or resistance, just kind of goes through. Trades a little bit above it, but as it comes down, here you see a little bit of supportive action, and here you see it as resistance. So even though there's not a lot of data here, it's resistance, here it's support. This is a key level to watch. I personally think that that almost has to hold, but if you would have asked me when the market was trading at 1,800, if I thought a few months later we'd be looking at $1,100, $1,200 gold, I probably would have said there's a low probability of that. So all cards are off the table, so to speak. We know about how we're looking at this count. We also are under the belief right now, as I said, we don't have any of our sub count here, but here, this is our transitional point. ABC correction comes up, fails, wave 1, wave 2, long wave 3, wave 4, and wave 5 just being equal is going to take us back to these lows, testing these lows at 1181. The potential for it to go lower is there. What is the absolute lowest I think it could go? And I'm not right now under the belief that it will go there, but it's not going to go below $1,000. That's my call. That's a tremendous move, 76%. But we are just dollars, less than $100 from the 61% retracement of this tremendous move. So traders, we're watching a meltdown in the precious metals markets. Now, for those of you that are silver traders, you're well aware of my position on silver, where I have stood, and I've stood firm on this. I have been saying we would see $19 silver, 19 plus, and we would see it relatively soon. I also said there was really nowhere else silver could go. The reason was we really broke through such a key level when the market broke through. I'll call it 2075. Good technical history. It even tries to bounce but cannot. Now, where will it go from here? 1988 current print. If it breaks through 67, it's breaking through a 76% retracement level. Now, if that happens, we have to really go back in time to take a look at what the possibility is. And this is my call, or my current take on silver as it stands. If 1967 does not hold, and we're very close to that right now, we have a lot of noise. Take a look at all this noise right in here. We could see the market kind of muddle through that, but if it breaks through this noise right here, traders, you're going to be looking at $18 silver in the near future. Now, realize any of this can change on a dime, but for right now, we've got gold back on the lows at 1245. The markets have gone fast. Anything can happen. Hopefully, all of you have put short positions on it. If not over the last few days, you did it during the special alert this morning. This is Gary Wagner wishing you as always good trading. We've got an interesting day today. We'll talk to you tomorrow for another daily update and review. Bye-bye.